Over 1 million people around the world follow Wall Street veteran Mark Chaikin for his shockingly accurate stock market predictions, and he just gave them a dire warning. Mark says we're about to witness a historic stock market shakeup that could soon create devastating losses for investors who don't know what's coming. And as a result, you only have 90 days to move your money. You see, Mark spent 50 years on Wall Street at some of the most prestigious hedge funds in history, and he's been on Fox Business and CNBC countless times. But this is a financial story no one else is telling. And if you let this take you by surprise, you could be in for a world of pain. He explains everything in a brand new free report available at rollingcrash.com. He includes the name and ticker of a popular stock that could be directly impacted by what's happening as well. Mark warned of beloved pet brand Chewy before it fell 45%, tech company Sea Limited before it fell 66%, furniture company Wayfair before it fell 76%, social media favorite Snap before it fell 36%, and food delivery company DoorDash before it fell 65%. Mark even called the Amazon crash before the famous FANG stock fell 35%. So you'll want to avoid the stock in his new report immediately. Again, simply go to rollingcrash.com for your free copy of this new report. Hi, this is Daniela Cambone, and welcome back to our summer series, our coveted summer series, I should say, where we round up the best of the best, your fan favorite guests, and invite them back to talk about the most important events out there right now. So please welcome back to the show, Lynette Zang. She's the chief market analyst over at ITM Trading. Lynette, it's always good to be with you. I need to ask, how are you dealing with the heat in Arizona?
Well, I am going up to my bug out house mostly. I go up there pretty much every weekend now because it's 30 degrees cooler. But you have to, like when I have to stay down here because of a specific thing and I go hiking, I do it at like 5 o'clock, 5:30 in the morning, and it's still just really hot. So you're in the pool, you're in air conditioning, or you do whatever you have to do super early.
But it's not stopping you from hiking. That's the part that got me. You waking up at 5 in the morning. Good for you.
Yeah, but it's much easier to do it at the bug out house.
Well, I'm glad to know you're staying cool, that you're safe, and you're here with us today to talk about some really important topics. I know you were on not too long ago, but after you were on, there comes this, juggernaut of an announcement that after months of debate about various currency and commodity baskets, a Russia and China-led consortium has apparently settled on using gold, alas, as the basis of a new planned international currency system separate from the US dollar and the euro. This was reported on Russian television, but they plan to formally introduce this new system next month at the BRICS summit. So I'm curious to get your thoughts when you saw this news, what you were thinking. I mean, do you believe the news? And two, before we actually talk about the system, why do you think they announced it? Like, if it's supposed to be a competitor to the dollar, if they're planning something, why announce it?
Well, it's kind of interesting because, yes, when I heard that news, immediately went to my mind was they can't do it till they burn off the debt. So unless they are creating with what backing. So I, of course, did some digging because that's what I'm about. And
yes.
And this announcement was made from the Russian embassy. I think it was in Kenya, but it was somewhere in Africa.
Yes.
And then RT picked up on it and ran as if it was a given. Now, when I did my digging into it, what the BRICS nations, what the BRICS Bank is actually saying is that they don't have plans to back any currency, or certainly the BRICS currency, with gold at this point, that all they're talking about is enabling all of its members to use their own local currency to transact with each other. Now, Russia has announced that they're not going to be attending this BRICS summit next month. So it's going to be really kind of interesting with them backing out. And I understand, why they did with the Ukraine war and not wanting to get the whole world involved and thinking that they're going to do it. But I personally Ultimately, yes. And I think a more interesting story is actually what's happening in Zimbabwe, because that's where the test of a gold-backed CBDC is taking place at the moment. But no, I don't think they can do it. I don't think they can do it.
Well, and thank you for explaining that, because one of the questions that came to mind is, okay, even if it's China and Russia, they don't have enough gold to back such a system. Don't you need a lot of gold to get that kind of system off the ground?
Actually, that's like a misconception of a lot of people. Like, well, they can't back a currency with gold because there's not enough gold. Well, what really matters is the price of the gold in terms of that currency. And the whole point of gold being a stabilizing influence is because of its rarity and its broad-based use. So you don't actually really need a tremendous amount of gold in order to back a currency. It would just be how it was valued in terms of that currency. So we will see a gold backing again, because they're going to have to do it in order to get confidence of the population to use the currency, which is what makes what's going on in Zimbabwe so interesting, because they're coming out, they're in the test phase right now to see acceptance of a gold-backed CBDC, except that at least at this point, I have not been able to find where in their documentation they're saying that that CBDC will actually be convertible into gold. And until a currency is actually convertible, how do you know the gold is there? I mean, it's kind of like a crapshoot. So it's really interesting for me to see how this is going to be accepted there. And I'm certain, I am 100% certain, every single central bank is watching this.
Okay, so to that point, and I'm happy that you're focused on that and giving it proper credence, because others would say, well, since when was Zimbabwe a market mover, Lynette?
Voila.
So even if they were to be successful.
Yeah, and think about when they tested bank bail-ins. Where did they test it? In Cyprus, right? So these tests always take place in areas where people go, oh, well, that's over there, that can't happen here, or et cetera, et cetera.
Yeah.
So yes, I give a lot of credence to it, particularly when you see this move for on a global basis of central banks now repatriating or bringing their gold home. That is more huge than anybody realizes.
That's right.
Right? I mean, for a number of reasons, but this is really picking up steam. So what are these central banks thinking? Why are they no longer wanting to hold it like, say, at the Bank of England, where they use it as collateral and then trade, right? What are central banks doing trading anyway? It's about market manipulation.
Which makes you think, Lynette, because you and I have been in the gold sector for a long time, and you remember when Germany repatriated its gold from the U.S. and they kind of downplayed the reason why. I mean, and what year was that? Years ago. Right. But now all the pieces, I mean, are they lining up? I mean, was that plan already in effect even back then?
Yeah, but Germany is a much more advanced economy, and so they were at the forefront. But I think a lot of it has to do with how the U.S. basically used the dollar system, the SWIFT system, to kick Russia out of the global financial system. Right. And every central banker was paying attention to that one as well. And so,
absolutely,
they know a key thing, which is if you don't hold it, you don't own it.
And okay, the BRICS aside, right, Lynette? I mean, would you still argue that the U.S. dollar's best days are behind it? Because there's all these announcements, like this one right here, India signing an agreement with the UAE that would allow it to settle trade in rupees instead of dollars, boosting India's efforts to cut transaction costs by eliminating dollar conversion. So all these countries kind of trying to leave the stranglehold of the US dollar, rebelling against the US dollar. I mean, at some point it has to add up to something significant.
Oh, 100%. The days of the dollar being the world reserve currency are fast coming to a close. And that move actually didn't start even, and it started back in 2002, because that was when the Federal Reserve first had to buy US debt, which is an indication that the world was either saturated in it or they weren't able or wanting is probably a better word, to buy enough of the U.S. debt that we were trying to shove down everybody's throats. So yeah, there is absolutely zero doubt in my mind that the U.S. dollar is losing its position as the world reserve currency. But I don't really think that it will be a BRICS currency or China or any individual country or smaller group of countries that would take over that role. I continue to believe that it will be the SDR, the special drawing rights of the Federal Reserve, of the International Monetary Fund, because there are no limitations. That's a basket of currencies. So for a number of reasons. Number one, it's been around since 1969, and everybody has now quite a bit of it. Between 2009 and then, a couple of years ago, when the IMF went in and gave everybody like a ton of them, of SDRs.
Right.
So, plus they have the substitution fund, so that it'd be easy to convert any dollar-denominated assets into SDR-denominated assets, therefore establishing the SDR as the largest currency in the world with the most liquid pool of assets, because they're taking everything that's currently dollar-denominated and converting it into SDRs. So between being able to put every currency in the world into the SDR, so you have a global currency, and then translate that easily into a local currency, that's the one that just makes the most sense to me.
Makes a lot of sense, Lynette. And I now want to talk about the U.S. Fed. We're speaking ahead of the July 26th meeting here. And since the last time we spoke, I mean, Powell been vocal that yes, they took a pause, but more Fed rate hikes were coming. But on the flip side, we get this, contradictory message that, well, the inflation fight, they're happy with the numbers they're seeing on the CPI front. So if they're happy with the numbers, why continue with the rate hikes? I mean, everyone's expecting one at this meeting. Your thoughts on this?
Well, I do think that they're going to hike it a quarter of a point. But what I really think the real battle is the battle for confidence, to try and get the confidence in the markets back from them incredibly and stupidly giving it away last year. I mean, this didn't last very long. So, and that's really the danger, is that the markets have been fighting the Federal Reserve. But we are just now starting to experience the lag effects of those rapid rate rises that came in 2022 and the beginning of 2023. So we haven't really felt yet the full impact. And then you have Janet Yellen coming out and saying there's not going to be a recession.
Right. But look at the yield curve. So the yield curve, the greatest indicator of a recession, is basically saying absolutely recession is coming. Yet she comes out saying, despite the lag in China, that's not going to spill over in the U.S. What do you do with this info?
Well, first of all, like my father always used to say, watch what they do and not what they say. Because it's in what they do that you can find the truth. And with global central banks buying and accumulating a massive amount of gold, more than they have since the last time we transitioned, probably more than that now, since the last time we transitioned in the 60s, and repatriating their gold, what does that tell me? That tells me the end is very, very near.
Wow. Well, I always say, would you agree that right now it feels calm, it feels quiet?
The eye of the storm.
Right? We know this is not going to we know this is not going to last long. And I guess I want to bring up the next point about the bank runs, right? We stopped almost talking about it. I'm not saying me and you,
Right.
but as a whole, right? And actually, the Wall Street Journal had a good article, is the banking crisis over? And they point to three concerns. One, deposit costs. High interest rates have forced many banks to pay more to retain deposits. Bond losses. Rising interest rates depress the value of low-rate securities and loans, and commercial real estate loans. Banks are anticipating losses in their commercial real estate portfolios.
Yeah.
So what's your take on the banks? How closely are you watching them? And should we be breathing a sigh of relief here?
No. Because the issues that plagued the banks that failed are still prevalent throughout the entire global banking system. Because again, it's not rocket science, but when they raise interest rates, principal values go down, whether or not they admit it. So no, this banking crisis isn't even marginally over. I think it was Western Alliance that did manage to survive what happened in March, but their deposit costs, if I remember this correctly, increased, was it 25%? Because they're trying to attract deposits back into the system. And that's the other piece that people usually overlook. They'll look for the highest yield, but what they miss is that with the higher the yield is in difference to the rest of the market, the more risk you're actually taking. So the regional banks are being forced to pay a whole lot more. Actually, all the banks are forced to pay a whole lot more. I want to point to the stress tests, though, because that's garbage. And I'm telling you,
Absolutely.
I said it when they came out with them after the crisis.
You did.
That it's just about public confidence in the banks. And then what were the big banks allowed to do? Well, spend an awful lot on dividends and buybacks and all of this stuff. And now what are we also doing is we're watching all of these big banks go into the market to raise a lot of capital.
And I'm sure you're seeing this as well at ITM. When I speak to my bullion dealer friends, and I mentioned this in another interview as well, that they're noticing that very high net worth individuals, with money way north of $200,000 in the banks are, maybe never thought of precious metals, but all of a sudden are not feeling safe in the system and are looking to gold as a solution.
Right, exactly. And we are definitely seeing that because they're starting to understand that, no, this banking crisis is not over. Maybe they've been able to paper over it, and so everybody is calm, and you have consumer confidence going up and all of this other kind of garbage, but it's built on a house of lies. And that's what Yellen's job is, and that's what Powell's job is. That's what all the central banks, all the faces, their job is to keep the public calm and keep them inside of the system, because it is easier to steal wealth that way.
Right? It's so obvious if you just start piecing the puzzle pieces together. I guess, Lynette, as a final thought, what do you say to folks who are looking at the price of precious metals right now? There's not a lot of excitement in the gold space right now, and maybe they're on the sidelines waiting.
I'm saying, what are you waiting for? Central banks themselves are not waiting, right? And they have the ability to manipulate that. I'm saying you take advantage of it and get everything in place, because we are inside of a major hurricane. There's no doubt about it. It isn't just the death of the dollar. It's the death of the entire financial, monetary, and social system. And that's huge. And they need as many people as possible to keep their wealth in there, because when we go to those CBDCs, you will have no choice if that is your only form of money. And they have said they can keep their finger on that button 24/7, which means they can also cut you off. I mean, it really is simple. You got to have this, and it's got to be outside of the system. It's real money. Central bankers know it. You need to know it too. People need to know it too.
Just a point on central bank digital currencies. We have the launch of the Fed now? How closely are you watching that as a first step towards central bank digital currencies?
Huge. If you recall, during the issues that we were having in 2020, they said, how much easier would it be if everybody had an account and we could push a button and just put money in there? So that's what they're setting up for, is to absolutely enable pushing the CBDCs onto the population. And they're going to try and keep it as close to normal as possible so that we can accept it and start to use it. And it's not using the money that, it's just what they'll do. It's not using the money that they're going to push into it, which will, again, here's the thing, Daniela, and nobody talks about this, but we have virtually no purchasing power left in the currency. Officially, you got 3 cents left. And the biggest tool to regulate that are interest rates. And every time the Fed tries to raise interest rates, it creates the next crisis. So why isn't anybody talking about, what happens when we do get to zero?
Right.
The stock market can go to the moon, but 1 trillion times zero is zero.
It's terrifying.
It is.
It's absolutely, yeah.
It is. But that's the point of being prepared. And when do you want to be prepared? While you still can? I had somebody ask me the other day, well, do you think that once we go to a CBDC that there are going to be restrictions around gold or the kind of gold that we can buy?
Good question.
And I'd say, I think so. Yes, absolutely. Because what gold does is it competes with dollars or euros or yen or anything else. So it would be competition to the CBDCs.
Right. So let's just play that out. Are you saying they could say, they obviously could see what you're buying, so they could say, oh, you bought way too much gold in this one calendar year, and maybe even limit the amount we're buying?
Yeah, they could. Yes, absolutely they could. Or they could say you can only buy it in an IRA, which is easy to confiscate, right? But this kind, everybody knows I personally do not buy bullion, and I haven't, thanks to my Uncle Al, who showed me the beauty of being able to have the kind of gold that you could use in the normal marketplace. Because this isn't all doom and gloom. There are opportunities, but you need to be in the right place at the right time, holding the right asset so that you can have that wealth transfer your way for a change. And if you have CBDCs, they've already told us you have to and watch what they're doing, right? They are showing us, they aren't just telling us. They want the masses, they want the public to have nothing. But wealth never disappears, it just shifts location. So if the 1% own even more than they own right now, and you're having to rent everything, who determines the price on that everything?
On that note, Lynette Zang, thank you so much for always enlightening us. I adore you. I appreciate your time. Thank you. And I was wondering, in this heat, how are your crops doing?
Actually, we have everything pretty much shaded. At the moment, it's fig season. So I've been eating figs. They're delicious. And
I love figs.
Well, I wonder, can we send you some?
Don't worry, I'll come visit you. But yeah, wow, that sounds amazing. Nothing like a fresh
Oh my
fig.
God, they're so good. But also the orchard, we finished putting the orchard in up at the bug out location. So I have a kitchen orchard and I have a production orchard. I'm going to have more fruit than, oh my God, anybody wants them, we'll probably give it to them. But I had my very first apricot there when I was up a couple weeks ago. I had to stay down here last weekend, but a couple weekends ago. It was so good. So I'm elongating my season. When it's done here, up there, it's just starting.
Wow. Well, you are prepared.
Yes.
You have been preparing, and now you're reaping the fruits of that. No pun intended. Lynette Zang, I wish you a wonderful end of your summer. We'll speak to you soon. Thank you for joining us.
Thank you for
the
having
summer
me,
series.
Daniela. You're one of my favorite people, too.
Yay, fantastic. So much kindness and love. That's all we need, people.
Isn't it?
So thank you, Lynette.
You're very welcome.
So simple. And thank you all for watching. We will have more great content coming your way, so be sure to stay tuned to the Daniela Cambone Show and sign up at danielacambone.com. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.